This week gave us everything: an unusual Asia bank holiday, a CPI news disruption, a brand new all-time high, and finally, US polished off with a drop into the weekend trap. On top of that, we had huge macro updates from Jarrid, insights from Pedro and Annii, and some brilliant community wins with full charts and TA behind them. Hi, my name is Janet and this is Trade Travel Chill. If you're new here, welcome. If you're returning, welcome back. Be sure to hit the like and subscribe button so you can be notified every time I upload a new video. Before we dive in, just a quick reminder that this video is for educational purposes only. Consider grabbing yourself a TTC membership using the link below, where we talk live price action, or stay tuned for Annie's regular updates here on YouTube. We came into Monday with an Asia bank holiday, and if you've been following along, you'll know that usually means expect the unexpected. Normally Asia plays a very predictable role. The typical Asia session consolidates within a 1 to 2% range, setting up the day's initial boundaries. UK then picks up the trend, and US either continues that trend or reverses it. That's the rhythm we're used to. But with the bank holiday on Monday, the market didn't have that steady hand in Asia, and instead of calm consolidation, Asia gave us a large move to the upside, setting the initial high of the day much higher than normal. Now, whenever you see Asia deviate like this, you should immediately be thinking, is this move genuine, or is it setting a trap? What can help you figure that out is timing. Sunday and Monday often give us false move week beginning, and when you see a big move straight out the gate during Asia, especially breaking that usual 1 to 2% range, you should be leaning towards this being a trap. If you were tying that move into the model on the 1 hour time frame, this large move from Asia was completing rise level 3 for the 1 hour time frame. So the last thing you'd want to be doing is hunting for fresh longs at this point. There were multiple confluences to justify a short, but if you're newer to trading the model and you notice that a session isn't behaving normally, that can be your cue to step back and stay flat for the day until something clearer sets up. So once the Asia session has finished, it is clear to see where the initial high of the day is and the initial low of the day. The second leg of the double top M formed right in the gap between the closing of the Asia session and the opening of the UK session. That reversal pattern, M formation, led us into drop level 1 over the UK session. We then got a retest of 50% Asia. So 50% Asia is measured from the Asia range. So if you don't have access to our exclusive indicators because you are not yet a member, then draw a fib from Asia's initial low of the day, so the lowest point that Asia went to and the highest point that Asia went to. And this is going to be a clear level that you would watch to see if UK or US session provide you a retest of that level. So once we got our retest of 50% Asia, we then followed through with a drop level 2 into Tuesday. Now our cabin crew spotted this in real time. NRJ's Ethereum chart called out the spike above the high of the week into the 7-day liquidity pool, followed by a retrace back down to 50% high and low of the day, alongside this blue vector candle and the EMAs. So we see that spike above the high of the week into the 7-day liquidity, price pull back into the EMA, 50% high low of the day, and the blue vector candle, and then price shifted out from there. A perfect read of how price interacts with the key liquidity and TBD levels. Cody's US session chart on Monday nailed the short scalp off 50% Asia. Why is this important? Because it shows how to use confluence. In this case, the 50% retrace, session timing, and rejection candles to build conviction in a setup. This is why confluence matters. One signal on its own can be misleading, but when you have multiple factors lining up, session timing, key TBD levels, and candle behavior, you dramatically increase the probability of success. Now, whilst price was setting up this M formation, we also had some really important content come out that framed the bigger picture. Pedro's YouTube video explained the possibility that the January to April move was a small bear market and that we may now be entering a new bull market cycle. He based this on Mike Wilson from Morgan Stanley, who argued we've been in a 3-year rolling recession. According to Wilson, the tariffs in April marked the final capitulation, the flush, meaning we could now be in a new bull market. Pedro wasn't saying this is guaranteed. His point was build a plan for what if happens, because if it does, you don't want to be unprepared. Then Jarrid dropped a new blog, and while it's complex, here's what it really comes down to. Trump wants rate cuts, but not for the usual reasons. His push isn't about helping the economy, it's about making government debt cheaper to pay off. The math doesn't really back him up. The Treasury is rebuilding its cash reserves, TGA, to $850 billion by the end of September. To do that, they're pulling money out of the system, out of banks, out of reserves. That drains liquidity and tightens the market. The Treasury is issuing more short-term bills which act almost like cash instead of long-term bonds. This is like quietly adding liquidity back into the system without making it obvious. It's not full-on money printing, but it helps markets stay afloat short-term. QT is still active. The Fed is letting $25 billion a month roll off its balance sheet. Even with Treasury buybacks trying to offset that, liquidity is still slowly shrinking. The Fed's reinvestment policy could become a problem. Right now, the Fed is buying long-term bonds, which is keeping long-term rates lower. If they stop doing that, rates could spike, and that would hit risk assets hard. Growth is slowing, inflation's cooling, business investment is softening, and the Fed might be forced to cut rates lower, but not for politics, just because the economy is actually slowing. Why does this matter for trading? When you understand that liquidity is tightening in the background, even if price looks bullish on the chart, you're more cautious about chasing risk. It's about being aware of the macro conditions, not just the candles in front of you. Even if crypto pumps short term, you should keep in mind that macro is still leaning bearish. Tight liquidity means these rallies can fade fast, especially if the Fed changes its tone or if the TGA rebuild accelerates. So while you can trade what's in front of you, don't ignore what's happening behind the scenes. That's what keeps you from getting caught out on the wrong side of the move. Tuesday gave us a clean demonstration of how structure can still prevail, even when major news threatens to throw everything off course. Coming off Monday's double top in formation and 2 level drops on the 15-minute time frame, Tuesday opened with price sitting at the low created by the dead gap zone. This became our initial low of the day and also the first leg of what would later become a W formation. Now here's the thing, if you were following the model strictly, we would have expected a drop level 3s, but this is where trading gets nuanced. We know that high impact news events like the CPI can disrupt the model, and when that happens, when price behavior doesn't align with what we expect, it's often best to sit out. This is exactly what Annii talked about live on her YouTube during her CPI live stream. She reminded everyone not to force a trade if the model shifts, especially around news events. You wait, observe and look for new structure to form, and that's what we got. As we headed into the CPI release near the end of the UK session, price formed the higher low, forming the second leg of a W formation. After the news dropped, price broke out above the previous high of the week, shifting market structure and initiating a new rise level 1. Now let's pause and break that structure down. When you're trading a W formation on any time frame, whether that be the 5-minute or the daily time frame, when price starts to push away, you want this to break the 50 EMA with volume. So if you've identified the W on the 5-minute, then you want it to break the 5-minute 50 EMA with volume. If it's the daily time frame, then the 50 EMA on the daily, you would want that broken with volume, whilst at the same time breaking the center peak of the W formation. That there then gives you a rise level 1. So when we go back to price action on Tuesday, we did get the W formation, broke through the 50 EMA with volume above the center peak of the W formation and our previous high of the week. And if you did not take this trade, no biggie, because you can take the conservative entry, which is the retest or higher low that proves the move. So once price came back, proved the move, gave us that higher low, this was our sign to stop looking for our drop level 3, and instead something has shifted, and if you are wanting to trade, you would be looking for long. From there, rise level 2 plays out beautifully, giving us clean structure and further confirmation that price wants higher. It is at the end of the UK session where I host the live call for the community, giving them my thoughts on what I think is going to happen going into the US session. It makes the most sense. This here to be the W, rise level 1, down, broke the 50 EMA, broke the center peak of the W formation, came back, retested the W formation. So any higher lows that you get would be an entry to go long. If you are wanting to trade this move here, would have to be a scalp. Take your profit and get out, because the retrace could happen anywhere between wherever rise level 3 goes to. So when price retraces, it could bounce to 38.2 and your entry would be fine. Sure, it could bounce to 50, maybe it comes back to your break even, but it also could come back to the golden pocket and it would take your trade out, right? So you take the profit and then you just hunt for the next entry. Hopefully it's the 38.2, because then that would show a nice impulsive move rather than corrective, and you would be aiming more towards the 27 fib or possibly minus 618. When it comes to midweek reversal, could the Thursday and Friday news reverse price? Yeah, it could reverse price. And this was my chart update to go with that call. This is the shortest chart update you've ever seen. So here you could see I was looking for a higher low before continuation to the upside. Once price gave us the initial move up, I was looking for price to come back down, give us a retest for continuation to the upside, ideally targeting the all-time high, with the ultimate target being the 124 region, which lined up with that fib level that I showed in the call. You can see that we did retrace, we got the higher low, and then price shot out from there. It came straight back into the level I had marked out on my chart as the trapped traders zone, which is shown here, and then I was expecting price to give us a retrace before continuation. So we did get that retrace back to the EMAs, and then price shot up and we hit the 124,000 region, breaking the all-time high and setting a new one. That there completed our rise level 3 for the 15-minute time frame. What's important here is that all of the signs were there if you were tracking the model live. Once the W formed and we cleared the previous high of the week, your job was no longer to look for shorts. Your job was to follow the model and look for longs on retraces or sit out and wait for something clearer to present. Alright, coming off Tuesday's breakout and Wednesday's continuation, we officially saw the 3-day swing. And anytime we see that clear 3-day progression, we know we're stepping into midweek reversal territory. That's typically when we start preparing for a potential shift, especially if price is extended or at a rise or drop level 3. It lines up with the news event and conditions align with the top being set. And that's exactly what we got, a reversal pattern on Thursday. Now with these types of setups, it's important to keep your expectations in check. Single session M's aren't always reliable. They're not invalid, but they don't carry the same weight as multi-session M and W's, which show you multiple market makers stepping in across time zones. But this was almost a repeat of Monday's M formation, except this was multi-session because the second side M happened in the gap, whereas this one here was a single session M. So this reversal pattern kicked us into a drop level 1 during Asia, followed by a drop level 2 during the UK session, which also aligned with the news event. That's 2 levels down, but no confirmed drop level 3 just yet. And when there's no third leg, you've got to be disciplined. If your model says to wait for confirmation, then wait. If you didn't trade any of this, don't beat yourself up. Not every setup deserves your capital. This is one of those days where you observe, document the structure, and wait for something cleaner to develop. Now zooming out a little, Annii dropped a great YouTube video titled Why I'm Taking Profits on Ethereum at 4,700. She broke down the ETH reversal perfectly, highlighting why she's locking in ETH gains, what she's waiting for on ADA, and the structure she's watching on XRP and Litecoin. She even touched on when retail patterns are likely to break down and when they're likely to play out. If you've been tracking her earlier entries or tuning into TTC streams over the past month, this was your follow-up playbook. If you need an exchange to trade on, consider checking out WEEX. It has a super clean layout, but what makes it really stand out is the ability to open multiple positions on the same asset in the same direction without merging them. That means you can manage each trade separately, no average entry, no confusion. Plus, when you create an account using the link below, you unlock VIP 2 trading level, which gives you a 25% fee discount. I've also dropped a full tutorial on the TTC YouTube channel. It walks through every tab, spot and futures. So if you're new to the platform, it's all there for you. Alright, so after seeing the single session M on Thursday and knowing we just completed a 3-day swing to the upside, Friday gave us the final piece of the model. Price started off with a retrace back to the EMAs, then went into consolidation. The initial high of the day was set during the Asia session, and we can see price repeated that level and failed to break it multiple times before we got the breakdown for drop level 3. Completing the full intraday cycle we mapped out all week. And of course, where did that take us? Right into the weekend trap. If you've been trading with us for a while, you'll know that the weekend trap is where they set the next leg of the move. Whether that's to fake out retail, draw liquidity, or build up for a reversal. So if you weren't entering fresh positions here, good. This is where we observe and prep. Now, if you were still wondering whether this Friday dip was a gift or a trap, Annii dropped the perfect video for you. She broke down exactly what to watch before buying the dip, and it's not just about candlesticks. It's about macro, price behavior, and how to tell the difference between a discounted setup versus bait for liquidity. She covered key levels to watch and confirmed the reversal criteria and highlighted which conditions would need to hold for this to be a genuine flash sale. So if you were feeling FOMO, go watch that video. It'll give you the clarity to act with confidence. Meanwhile, over in macro land, Jarrid gave us some serious food for thought. He broke down insights from Ben Bray, highlighting how the bond market is essentially being manipulated post-COVID, with the government pulling liquidity and pushing the economy into a state of slow decay. Call skew is still elevated, yet mortgage life is collapsing, spreads are narrowing, and volatility is dying out, and all of this is compressing risk. Jarrid explained it like this: we're watching the last pieces of the puzzle fall into place that could mark the end of the bull cycle. Not in a dramatic, we crash tomorrow kind of way, but in a slow bleed that adds pressure to foreign currency, forces rate cuts, and signals the system is running out of ways to extract yield. And just to pile it on, Japan's bond market is screaming, and the 3.11% level on their 30-year yield is flashing red. Any break higher from here could destabilize broader risk assets. We're already seeing this tension reflected in the moves across FX and crypto pairs. So whether you're a technical trader or macro-informed investor, this is a moment to stay razor sharp. Before we move into the weekend trap, I want to quickly highlight some standout wins from our community this week, and more importantly, the TA and structure behind them. Cryptones ran a textbook grid bot on Link using Annie's strategy around false move week beginnings. His goal? Cover the $88 business class membership. It was clean, structured, and fully within the system. Dinah shared both a win and a lesson. Her 11-to-1 risk to reward trade was executed perfectly, but she also showed her lot. A 4-to-1 that she left running overnight, hoping for more and woke up to nothing. This kind of honest reflection is how we all improve. Kepakpo, I hope I'm saying your name right, caught a US session open scalp off the VWAP and the 200 EMA. It was a win, but more importantly, it followed structure and session timing. Loz shorted BTC before bed, spotting weakness at the high of the week. She gave her stop loss breathing room, avoided greedy targets, and locked in a 3-to-1 risk to reward for 44.59%. That's the kind of setup that builds belief. And Scousnat caught a quick scalp with Cajun's higher low entry, bagged 12.35%, shared her markup, and gave credit where it was due. That's the power of trading together. Nice chart, Nat. I know you were looking at this one. If you want to learn this strategy in detail, consider grabbing yourself a membership. We have 2 memberships to choose from. If you're an independent learner who loves going at your own pace, business class gives you full access to our courses, daily written market insights, recordings of live sessions, and custom indicators. But if you want hands-on support, live trading sessions, exclusive indicators, altcoin reports, and direct access to pro traders and our mindset coach, then first class is where you want to be. You get everything in business class and a whole lot more. And there is a 48-hour money-back guarantee if you do not find value in your membership. Tap the link in the description to explore both options and see what fits you best. And now all eyes are on how this weekend trap unfolds. So far, we've had a typical weekend trap. We've seen longs and shorts get induced and liquidated. We've got an M formation sitting under the 800 EMA, and late longs have already taken a hit, which you can see from the drop in open interest. The smartest move right now, if you are unsure, is don't force it. Wait for the session to open, the new week to begin. Let the dead gap zone and Asia session reveal if we're getting a lower high and a clean retest of the EMAs. That's your signal, not your emotions and not boredom. If it's not obvious, sit tight. And if you want help staying ahead of moves like this in real time, Annie's next video is right around the corner. Make sure you're subscribed and keeping up because you don't want to miss it.